Welcome. I'm glad you're here, and today we want to do just something a little different than the norm. You see, we're coming out of the first half of this year, and I wanted to take a look at what happened over the first half of this year, and then the adjustments that we can be making for the second half. Now, the first half of the year was really just about 7 stocks. Whether it's NVIDIA, whether it is everything from Apple to Amazon to Google to Tesla, all of these stocks were generating a lot of buzz and excitement for the markets, and that actually held up the markets. So when we take a look at the S&P 500, that is something that's called cap weighted, meaning the market cap of the companies. The higher the market cap, the larger of a position in the stock market they have. So it's not unheard of then that Tesla, Apple, Amazon, NVIDIA, all of these companies are gaining more prominent share and kind of holding up the markets. Now, of the 500, if you are one of the 493 other stocks, either your stock was down for the first half of this year or it was barely growing, because all of that momentum was going into those very select few stocks. Now that's really what has happened, and most likely that will progress, because what we are seeing is the fact that we're coming into this environment that is what we call lead 3. The economy is slowing, but we have this sticky high inflation that's not coming down fast enough. And I've been talking about this over the course of the last 6 to 9 months, but it's still true. So what are the opportunities, and what are we doing to make sure that we can see some of the growth while maintaining some of the, risk management? And that comes down to what works well in this environment. You see, in this lead 3 environment, we have utilities that work well, but we also have still technology. And so being invested into some of the technology companies, some of the utility companies, and even some of the energy companies, as they start to pick back up, would be a great opportunity. But the other item is that the world, so the rest of the world in general, is in a lead 2, which is growth of their economy and growth of inflation. So we could be seeing that in Europe all the way over to the Pacific and Asia. So when we take a look at all of the different things, if we add in a little bit of emerging markets, we add in a little bit of Europe, we add in the companies that can be increasing inflation correctly, like utility companies, and continuing with technology, that can make for a very successful second half of the year. So that's really what we're focusing on right now. I know that's a lot. There's a lot out there, but we have an exciting opportunity ahead of us. I hope you had a great 4th, and I'm looking forward to talking soon. Take care.